Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about swing trading. We're going to be talking about a strategy that I absolutely love to swing trade on the short side, meaning I'm betting for the stock to go down in price. We're going to be talking about some tips and tricks and pretty much how this was probably one of my best shorts of all time. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. It's awesome. One, we actually teach you how to find stocks. I don't believe in alerts. I don't believe in getting rich quick. I understand that with swing trading, you have to have an edge. You have to build a strategy, and that's what we teach. So check it out down below, and we're doing our Black Friday sale for 51% off. So if you want to take trading to the next level, check it out. We have a group chat, private live streams, quizzes, lectures, all that good stuff. Everything you guys need to become that full-time trader you want. So check it out down below, and guys, let's jump into this here. So the first thing that I want to show you guys here is the stock. So we did a short here on Tesla. So shorting is betting for the stock to go down in price, right? So the entry price, I'll be completely upfront about it with you, was near and around, this 336 mark, right in that range, and I'll explain why we entered a short on that position. But more importantly, you guys will notice that with trading, it's very, very hard to enter a short at the peak top. It's almost impossible. And this is what I think a lot of traders don't realize. A lot of traders think that you got to buy and be super, super precise and get in on this position, at this exact penny, when in reality, yes, getting in and understanding your entry points is super important. But honestly, understanding your strategy and risk management, in my opinion, will help you succeed a lot better. And let me show you what I mean by this. So the stock here, Tesla, what we saw here was the stock on this really nice trend line here where it hit it, got good buying pressure. The stock recently popped up due to a good earnings report, about 25%, which is normal. When a company releases a good earnings, it's very common to see a stock explode. That's what we saw. We saw a little bit of a dip down, which is normal, because a lot of investors during this time here selling positions that they've been holding for a minute. And then we saw this. We saw this stock go from about $245 to $358 a share, which, to put it in perspective, that's about a 55% return in 5 days. So that's over 10% per day. Do you think that's sustainable? No. Absolutely not. There is no such thing as a stock that only goes up in value. Every stock throughout history has gone up, and it's also gone down. And I think that's very, very important here, because what we have a tendency of seeing is during this hype up right here is a lot of people entering these positions not because of fundamentals, because of emotion, because of fear of missing out. And that's what we saw, and that's what short traders like what I did take advantage of people. And at the end of the day, that's all part of the game. So looking at this stock here on the hourly chart here, what we saw was this, right, where the stock had this really nice trend. Okay, and what I mean by that is it hits this line, a couple of times, and we do get some good buying pressure, and it honestly just looked good. And even looking at like the 15-minute, you guys can even see it on here as well, right? Let's go ahead and draw that out. So you guys can see, that nice little trend line, and trends come in all shapes and sizes, right? So you can have one like that, it kind of just picks off wherever it goes, right? So now what we saw was this. Let's go back to the hourly because that's really what I used for the entry point here. So you guys can see this dip down, right? This dip down represents a trend reversal, right? Where it breaks through that old support, breaking that trend. Now what you do is this. You understand, all right, let's go ahead and get our short position tool. So right here was our entry near and around this 336 mark, okay? We set our stop loss above highs. Okay, so we risked about 6% for it to, in my opinion, have very realistic levels. I would say near and around the 250 mark. So let's go 250. So we're risking $1 to make about $4. So this is a trading calculator that I really love to show new traders. So imagine you guys are starting out with $500. Maybe you take a trade a week, right? You risk 2%, which is on average, and you have that same risk and reward of about, 4 to 1. Okay, so risking $1 to make $4, but your win-loss percentage isn't very good, right? Maybe it's 40%, which honestly is about average. The thing is over the course of a year, guess what happens? Is your total end balance is over $1,000 with a win-loss percentage of 40%. So 60% of the trades you take are losers. But having good risk management is what keeps you in the game and actually making money. And this is what I want to show is this, right? Trading, risk management, risk and reward is incredibly important. And honestly, guys, if you guys are trading, I highly recommend signing up with Moomoo, which is the broker I use because it has that tool. And it's awesome. It honestly will help you trade. It'll help plan out your entries, your exits, your risk management skills. And it's just the best broker. Check it out down below. I'll put it down in the description for you guys. But at the end of the day, focus on learning. Don't expect to make $1 million right off the get-go. Focus on base hits that just compound over the course of a year. And doing that, just being consistent will really, really help separate you from other traders. So I hope you guys all enjoyed this. Don't forget to check out our school, code Black Friday for 51% off, and sign up with Moomoo. I'll see you guys. I hope you guys enjoyed it. Take care.